Are you trying to apply for a USDA loan and you have overtime income? Well, the reason I created this video is because what your income looks like might not be the income that you can use to qualify. Um, and if you have overtime income, that's what we're going to talk about today because it is treated differently from your normal income. Let's go ahead and blow this up so this is a little bit bigger. Now, if you are trying to qualify for a USDA rural development loan, this is a really cool loan. If you're buying it in a specific rural area in a place that's eligible for USDA loans, it's 100% financing, no down payment, reduced mortgage insurance. It's a really, really good loan program. But you have to be buying a house that qualifies in a USDA eligible area. If you are not buying a house in a USDA eligible area, I would look at the Fannie Mae, Freddie Mac, and FHA videos. So I did a video for each guideline because whether you're using conventional, there's two different agencies, Fannie Mae, Freddie Mac. You could do FHA, FHA government insured, or a VA if you're a military. Each one of these agencies treats overtime income. They calculate overtime income differently, a little bit differently. So if one person says you don't have enough income to qualify, a different agency may calculate that income differently. So that's the reason why I wanted to create a different video for each one of these agency guidelines so that you not only know that there are 5 agencies and 5 different ways to look at this, I want you to know that when you're working with somebody who's experienced enough to know all the different options, they're not just going to say yes or no based off of one guideline. So all agencies, underwriters are going to look at 2 things essentially when it comes to overtime income. Overtime income, they're going to look to see if you have a history of receiving the overtime income. Have you been receiving overtime income as a part of your job? Is that a normal part of your employment? Then the next thing they're going to look at is that overtime consistent? Has it increased or has it decreased over time? Right? Those are the 2 things that they're going to be looking at. So USDA only requires that you have 1 year history in the same line of work in order to use the overtime. Now, this is different from any other, from Fannie Mae, Freddie Mac, VA, and FHA, because they all require 2-year history of receiving overtime. Now, Fannie Mae and FHA will allow you to use overtime if it's less than 2 years, but there's a bunch of other factors that need to come into play. USDA is far more flexible. USDA is only going to see that you've been in the same line of work and you've been receiving overtime for 1 year. The income with USDA is always presumed to continue unless there's documented evidence that the income will cease. So every other agency, Fannie Mae, Freddie Mac, FHA, your employer has to state that the probability of continuing to receive that income is good. But with USDA, they just assume if you've been in the same line of work and you're receiving overtime income, that overtime income is going to continue forward. Very, very flexible, very flexible. The history of receiving the overtime, the underwriter is going to review all of your year-to-date income, all your year-to-date earnings, and compare those earnings with the earnings from the last 1 to 2 years. They're going to determine whether or not that income is increasing or decreasing over time. So when the underwriters analyze for the current pay period and the year-to-date earnings, if there's greater than a 20% variance in the income, so say the previous year you received overtime, but currently you're receiving less overtime than you did before. If it's less than a 20% variance, then that's going to need to be documented just to say that the likelihood of you receiving this moving forward into the future is good. If there is greater than a 20% variance, if it fluctuates by more than 20% from the previous 12 months, then it needs to be analyzed and documented by the underwriter to determine if it's steady or dependable. So if it's increasing, they want to see if that increase is steady and dependable. If it is, they're likely to use a more favorable calculation of the higher overtime limit. If it's decreasing, they're probably going to get the documentation. They're probably going to use the lower amount. But if it's steady, they're just going to average it over the amount of time that you've been receiving it. And that's the number that they're going to add to your income in the income line for calculating your debt to income. So the underwriter's job is to use the most steady and most conservative income calculation possible. If you are not buying in a USDA eligible area, you're going to find that these guidelines are far more flexible than FHA, Fannie, and Freddie Mac conventional. Underwriter discretion is really the underwriter has the ability to go through, analyze the entire package, look at the entire thing, and determine what the best income calculation is. So this is one of the reasons why you really need to be working with experts. You need to be working with mortgage professionals that have experience with this. Most times when the entire reason why I created this website, findmywayhome.com, is I started this website when the mortgage industry crashed in 2008. And I did it because there were so many sleazy loan officers in the market. How can you trust anybody? How do you know who to trust? Well, I started this website in order to create videos and write blog posts to educate and inform you, so that you're making more educated decisions about your mortgage options. Because quite frankly, right now there are billions of dollars being spent every single year to convince you that the way you get your questions answered about qualifying for a mortgage is to fill out a form on the internet. And these forms go into a black box somewhere, and they land on some kid's desk in a call center somewhere in Detroit. And they just got in the mortgage industry 6 months ago, and they're just following prompts on the computer. And in almost every and well, we know actually the statistics are that less than 2% of people that fill out those forms will end up getting a mortgage. And it's not because you don't qualify. It's because you're talking to a telemarketer. And quite frankly, your options are limited to the experience and the effort of the loan officer or the telemarketer that ends up with your information, right? So we don't want that. So findmywayhome.com, there's a link here. There's a link below that you can there's a link below that you can click, and you can either ask a question and I will match you with one mortgage expert, one mortgage professional that I know, like, and trust that can help you. Or you can go to our state directory. You can click on one of the states, and you can see which mortgage professionals in our network are licensed in your state, and you can do some research on them. They've created videos, they've got blog posts. Do some research on them. If you know, like, and trust them as much as I do, you can reach out to them directly, and they're more than happy to help. So if you have any questions, if you have overtime income, if you have variable income and your loan officer said no, or they're giving you the wrong information, or if you get turned down, I just want you to know that there are other options out there. Don't take no for an answer. That's what we're here for, is to give you a second opinion. Is to give you a second opinion and hopefully get you pointed in the right direction. The answer should never be no. Sometimes it's not now. And when it's not now, we're going to help you put you on the path to home ownership and guide you on your way there until you get there. So that's all I have for USDA calculating overtime income for a USDA mortgage. If you have any other questions about qualifying for a mortgage, we are here to help. And I hope this helped you for this. So have a great day. Thanks for watching.